Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the show. My name is Al Gordon, and as always, we're working on your financial freedom. On today's show, I've got a question for you. What does it take to be a successful real estate investor? That's the question. I'll tell you what, that is a big question. And to answer that question, what I did was I reached out to 5 different real estate investors that I know and that I respect, and I asked them that question. And you know what? I got 5 different answers. And I swear, not one of them is a lawyer. You know, it's, the old joke. Ask a room full of 10 attorneys a question and you'll get, 10 different answers. Okay. Ironically, none of the 5 answers had anything to do with real estate. On the surface, that may seem peculiar, especially to the new investor, but it makes perfectly good sense. For example, what if you asked a successful baseball player what it takes to be a great baseball player? Yeah, just maybe ask somebody who's on the Dodgers. After all, they finally won the World Series after how many years? What do you think one of those players would say? Would the player give you an answer that has to do with baseball? Or maybe he would give you an answer that has to do with work ethic. Would he tell you to find the best bat made of the best ash wood, or a glove made of the highest quality leather? Or would he simply just tell you to practice every day? I honestly don't know what the baseball player would say because I didn't talk to any baseball players. But more than likely, if I did, he would say very similar things that a successful business person would have said, or a successful model, or a successful real estate investor. We all know the secrets to success, and we all know that there really aren't any secrets. If you think that there are secrets out there to success, I'm here to shatter your dreams, because there really are no secrets at all. Everything is out there in the public space, and you can find it if you look hard enough. It's that simple. But before I get to the 5 answers that I received, I would like to offer some helpful information that does deal specifically with real estate and real estate investing. After all, real estate investing is what the show is all about. And it's also what we teach at Lifestyles Unlimited. There are intangible characteristics that are necessary to be successful. And there are specific skill sets that you must also develop. So what I'm going to do for the first part of the show is I'm going to get into some of those skill sets. And there's no particular order. There's no rhyme or reason to how I'm doing this. The first skill set that you must have is to know your market. Yeah, know your market. And some of you are thinking, what does that mean? Well, let me tell you what that means. You have to know what a piece of property is worth if you are going to make an informed decision to invest in it. The simplest way I can say to get to know your market is by, some of you aren't going to like this answer, but here it is, actually studying the market. Yeah, you have to study the market that you're interested in. When I first joined Lifestyles Unlimited, one of the first things that I did was I attended our 2-day financial freedom seminar class. And in that class, I learned about the kind of properties I should be targeting and the price ranges of those properties that I should be targeting. Then what I did, because they instructed me to do this, so I did what I was told, I started looking at literally dozens of properties in my target range. I looked at properties in all parts of town. I looked on the east side. I looked on the west side. I looked in the north. I looked in the south. I looked everywhere. And when I found a property that was of particular interest to me, I did a cash flow analysis on that property. And when I found the next property, I did the same thing. I did it over and over and over again. And some of you might be thinking, well, that sounds like it's kind of redundant. But what it did for me was it gave me a firm understanding of what a good deal was, and more importantly, what was not a good deal. It helped me to understand which properties had the potential to provide cash flow. And cash flow is very, very important because it's the cash flow that allows you to generate income streams without actually having to, go to work and spend your time doing what your boss wants you to do, as opposed to, doing what I've been able to accomplish finally in my life, which is to essentially be retired, to make the decision on my own part as to what I will and will not do. And the other thing it did for me was it gave me a good understanding of which parts of town would best fit the model of investing that I learned from Lifestyles Unlimited. I mean, it's really that simple. When we come back from the break, I'm going to get into the second skill, which is learning how to do a property evaluation. I'll fill you in when we come back.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. So, on today's show, I'm asking kind of a simple question, but it's a powerful question. What does it take to be a successful real estate investor? Now, you can drop that into your favorite search engine and you can find, well, all kinds of stuff out there. I mean, there's a lot of people that have a lot of opinions. And you know what? I've got my own opinions too. And that's part of what I'm sharing with you on today's show. But in order to prep for the show, I reached out to 5 different real estate investors that I know that are investing in different ways. I'll share with you who they were. Well, not who they were, but what their investing modalities were. I spoke with one person that is very, very successful as a lead investor. In other words, somebody that puts together real estate deals and then brings along business partners who invest in that deal. And then that lead investor operates the property, and then everybody invested in the deal based on the structure of the deal makes money. I talked to another investor that owns property in the multifamily space, and they own it as what's called an IRO, or an independent rental operator. In other words, what they've done is they've gone out and they've done kind of the same thing the lead investor has done, except they didn't syndicate the deal. They basically bought that property for themselves, and they're the only investor in that deal. I reached out to passive investors, and the passive investor that I talked to gave me feedback. Now, what is a passive investor? A passive investor is somebody that would partner with that lead investor. Basically, that's how I do a lot of my investing. I invest money with other Lifestyles Unlimited members that are buying big multifamily deals, and I get to share in the returns that those deals produce. I talked with a very experienced single family investor. Now, this person that I talked to, they just happen to have a portfolio of about 40 single family homes. Well, they've got a couple duplexes and fourplexes thrown into the mix, but at the end of the day, it turns out to be about 40 doors. That's probably the best way to describe it. And then I chose to speak with somebody who's also a single family investor, but only has one house in their inventory. They're basically just getting started. So I felt that by targeting that wide array of investors, I would get great feedback. And to be honest with you, I got outstanding feedback. That's exactly what I got. But before I get into the responses and what they told me, which I will share with you, what I'm trying to do now is share with you some of the skills that I think you need to have in order to be a successful real estate investor. And in the last segment, I was talking about, you need to know your market. And that is very, very important. And I don't care where you choose to invest, whether you choose to invest in your own backyard or you choose to invest thousands of miles away from you, make sure you understand the real estate market that you're targeting. Now, the second skill is simply to learn how to do a property evaluation. Property evaluation it's similar to knowing your market, but it causes you to focus on a particular asset, not just the general marketplace. You have to know how to evaluate a property to determine if it's going to make money for you or it's not. You need to know what the values are for other similar properties in the neighborhood that you're looking at and what those properties have transacted for or sold for, especially in the single family space, because single family is valued based on a comparative market analysis. In other words, valuations determined based on what other like-kind properties in the neighborhood have sold for. Now, in the multifamily space, it's not how they're evaluated, but it's important for you to understand what other properties are trading for, because that will give you an understanding of what the potential market value is for the property you're looking at. So once you know that, or you've got a good idea of what that looks like, then you can know how much you can potentially buy your targeted property for. In other words, it gives you an idea of what you are willing to offer for the property, and you're going to take into consideration a lot of things that you've learned about that particular property when you do that. Now, keep this in mind. You get to decide your rate of return. Yes. You heard me correctly. You get to decide your rate of return. You decide whether you want to try and buy that property at maybe, let's say, a 10% discount. And if the numbers make sense for you and that's what you want to do, go for it. I'm not going to tell you no. Maybe you want to buy it at a 40% discount. If the numbers are telling you that and you think the condition of the property warrants that, then you've got the opportunity to offer that price as well. But what I don't want you to do is get hung up on discounted values of property. There's a myriad of reasons why you can buy a property at a discount. There's things like divorce or taxes that are owed on the property or death or deferred maintenance. Those are just a few that come to mind. You cannot determine, let me be very clear with you, you cannot determine your rate of return you want to achieve when you invest in stocks. I mean, you can project what you hope to get, but you can't determine what that rate of return is going to be, because that rate of return is controlled by the stock market and what the stock market does. And the stock market is going to do what the stock market is going to do. And that's just the way it is. You can't control that monster, nor can you choose your rate of return with any other investment asset class. If you know of one that I don't know about, send me an email at askal@luinc.com. I would love to look at it. But based on what I know, real estate is really the only asset class out there where you can make a determination as to what your rate of returns will be on a property based on, the fact that you know your market and you know how to, evaluate property. You also need to know how much rent you can charge for your targeted property. Make sure that rent is enough to cover your payment, including principal, interest, taxes, and insurance. The difference between your rental income and your what's called PITI is your positive cash flow. And setting a little bit of that aside for unforeseen expenses, that's also a good idea. Skill number 3, right after this.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the show. So I'm asking the question, what does it take to be a successful real estate investor? And what I've been doing is I've gone through 2 of the 3 skill sets that I think you need to possess in order to achieve a good response to that question. Now, the first 2 things that I recommended you do from a skill set perspective is know your market and then learn how to do a property evaluation. The third thing you need to do is to come up with the money to buy your positive cash flowing property. Financing is perhaps the biggest obstacle people face, after maybe fear, hesitation, and procrastination and things like that. And I'm not going to sugarcoat this. Lending standards have tightened up this year due to the COVID-19 pandemic. But let me also make clear to you this. Lenders are still lending and borrowers are still borrowing. After all, people still need great places to live. And in a sort of a ironic spiral of negativity, the banks are requiring more from borrowers than they did this time last year. But ironically, I use that word again, interest rates have dropped to their lowest levels in my lifetime. And I'm kind of old, so that's really a good thing. I think maybe the banks have become overly cautious because I think what's happening is they're having flashbacks to 2008. But like I said, deals are still working and investors are still buying and operating real estate assets. So if the banks are a problem for you, you can simply look for other options. But I realize that this may or may not be an option for you. If you have good credit and a favorable debt-to-income ratio, then using a bank is still an option for you, and it might be the simplest option. Personally, I'm a big fan of mortgage brokers since they can shop multiple markets on your behalf and can provide what I would call one-stop shopping in order for you to find your capital sources. Now, I also understand that there are some of you out there that maybe don't have good credit, or there are some other obstacles in your way when it comes to qualifying for financing. So what I would recommend you do is explore other options that are out there. Rather than getting no after no from the big banks, go check out smaller mortgage companies that specialize in working with investors. If they, in my opinion, if they survived the financial meltdown of 2008, then they're more than likely an ethical company that was not breaking the rules and stable enough to meet your borrowing needs. Another option might be for you to look towards a private money lender. So you might be asking, what is a private money lender and how do you find one? Well, they're simply an individual or a group of individuals who have money and are willing to lend it to you. And, they bring the money to the table. You bring your knowledge and your time. They don't want to get a paltry 1% return from the banks because that's all the banks are paying. And they don't want the volatility of the stock market. So they're willing to lend money to you so that you can get a higher rate of return and they can get a higher rate of return and you ultimately get the money you need to buy your properties. It can be a win-win situation. So how do you find private money lenders? Well, the same way you find a good job or a good mate or even a good mattress, by looking, by networking and asking around, by letting people know that you are a real estate investor and you are looking for private money sources. Naturally, if you go out on the street and start looking for a private lender, your odds of finding somebody willing to lend you money are slim and none. So don't go look for a money lender at the bus stop or in the supermarket. Look for them at investment seminars or at real estate investing workshops or classes or in the classified ads. We actually have a bunch of them available to us as Lifestyles Unlimited members through our vendor program. The key thing that I want you to take away from this is that you've got to get involved with groups that attract investors. They're out there. You just need to go find them. And, if you don't want to do a whole bunch of looking, you can just become a member of Lifestyles Unlimited and we'll solve all those problems for you. So now that you know your market and you know how to evaluate a property to determine what it's worth and if it's worth pursuing, and you have the financing secured, what next? Well, now you make an offer. It does take some degree of courage to make your first offer on a piece of investment property. The first time I was going to make an offer on a house, I was up all night long, tossing and turning in my bed because I'll be honest with you, I was a little bit nervous. In the morning, I did nothing. I kind of lost my nerve, and that deal slipped away. It's perfectly natural to have that fear. We all have it. But the thing that I learned and the thing that you must do is face that fear and overcome it. So, what are the characteristics shared by successful real estate investors? Let's go all the way back to the 5 answers I got from those successful real estate investors that I polled, and not like the polling that went on for the presidential election. Let's not even go down that road. Like I said at the beginning of the show, I asked 5 successful investors what they feel it takes to be a successful real estate investor. So you're probably saying, all right, Al, get on with it. What did they say? All right, here it is. First, you need to want to be successful. That's right. On a daily basis, I meet people who say that they want to be a real estate investor, but they are not willing to make any sacrifices, and they're not willing to put forth any real effort. And that's a shame, because they want to get rich. They want to retire. They want to travel. They want to do all those things. They want to live the lifestyle, but they don't really want to try too hard to achieve it, nor do they really try to learn how to achieve it. So deep down, they don't really have a burning desire to be successful. Having a desire to succeed means that you are willing to take the time to learn. Learn your market, learn how to evaluate a deal. You know where I'm going there. So the second answer I received is a common characteristic of successful real estate investors. It's called humility. That's right. To be a successful investor, you should have an understanding that you do not know everything. For you husbands out there, if you're not clear that you don't know everything, just ask your wife. She will tell you. Yeah, okay. That means you need to learn from others, and you should be willing to ask for help. You need to find a mentor. You have to know your personal limitations. Understand that although you can paint a house for cheaper than a professional, the amount of time it takes you to complete that task will likely be longer. And that is equivalent to losing money. Many experienced investors become members at Lifestyles Unlimited, and after they attend our 2-day class, they quickly realize how differently they could have been managing their properties. They already have experience investing, but they were willing to learn things they never thought about themselves. One of the things that we like to say at Lifestyles Unlimited, and this is what we call a Dell-ism. In other words, this is a phrase that our founder and CEO, Del Walmsley, coined a long time ago, is simply this. We work on our businesses. We don't work in our businesses, because your time is better spent doing the things that an investor needs to do than doing the things that you should be paying other people to do. And when we come back from the break, I'll hit the other 3 responses right after this.
Here's Lifestyles Unlimited founder and CEO, self-made multimillionaire, and national radio host, Del Walmsley, on the effective way to run a business.
There are people that run their businesses on a shoestring. If you own an apartment complex and you have no cash, that's not a very effective way to run a business. My businesses, each and every one of them, have cash savings. In other words, we can make no money or make very little money. We'd still survive. For those of you that haven't thought it through that far and you don't have any cash savings, let's get you in here and get you educated on how to save what you already own. The mom and pop businesses are going to take a major hit. If you've been running your business that way, you need to get into Lifestyles right now and learn how to operate your business the right way.
Lifestyles Unlimited has been helping people succeed since 1990. Join us for our free online real estate workshop and learn the 7 principles we teach to run our businesses and provide for our families. Register at lifestylesunlimitedworkshop.com.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
What makes a successful real estate investor? Well, I'm sharing the responses that I received from what I consider to be very successful real estate investors. And the third response that I have for you, ironically, came from the person that I know who has invested in their very first single family property, and that's what they have in their portfolio. So they're not super, experienced with when it comes to a depth of properties, but they're on track for being very successful. And here's what she told me. A successful investor practices a little thing called self-discipline. As in every area of your life, self-discipline is absolutely one of those keys to success. Like I said, this member who is fairly new to Lifestyles Unlimited, she just did a deal that netted her over $45,000 in equity capture on her very first deal. Now, how did she find such a home run deal? Well, she had the self-discipline to wake up every morning and search for and evaluate properties before going to work. That way she could be the first person to call her agent when a good deal popped up. Now, it may sound tedious, but she found this deal after less than a month of looking. So my question for you is this. Would you wake up an hour early for a month straight to earn an extra $45,000? Well, she did. And I'll tell you what, she did a great job. Now, the fourth response I had from the successful real estate investors is to exercise your risk tolerance. Courage and risk tolerance, like a muscle, get stronger with every use. I certainly do not encourage you to be a big risk taker. In fact, at Lifestyles Unlimited, we teach a very safe method of investing that has protections built into it at many different levels. But it may still seem like a risk to you, and that's okay. You're going to buy a house that you have no intentions of living in yourself. So until you take those calculated risks and exercise that risk tolerance, you will never be able to excel. It is that simple. Now, again, I am not encouraging you to be foolhardy. I am not. But I do encourage you to learn which chances are worth taking. And I do encourage you to take those chances. Now, the final response I received, it kind of seems like a no-brainer. Here it is. Be a good decision maker. Once you make a decision, don't second guess yourself. First, make the decision. Then make sure it's the right decision. If you decide to change jobs, make it the right decision. If you choose to marry, make it a successful marriage. And don't question your decision. Instead, make your decision work for you. I think it's okay to change your mind once you reevaluate the situation. Well, except maybe in the case of marriage. For example, there was a basketball coach in the state of Texas. His name was Don Haskins, and he was pretty much legendary in West Texas. Now, his team was the only one in the state of Texas to win an NCAA men's basketball championship, and he decided to leave his job at the University of Texas at El Paso to pursue a job at the University of Detroit. Now, he drove, how long is it? 1,000 miles or so to Detroit. He stayed there for one day, and he turned around and he drove back to West Texas. He wound up staying and coaching at UTEP for a total of 38 years, minus that one day. I don't think he second-guessed himself. Instead, what I think he did was he merely reevaluated and made a new decision. So whatever decision you make that decision work. The key is that you must make a decision. You have to make a decision. Now, I'm going to quote what I consider to be a famous song. Now, some of you may not recognize the band or anything like that, but it is a song called Free Will that was written by and sung by Rush. And in that song, they say, if you choose not to decide, you still have made a choice. Okay, I apologize. I didn't mean to make that song stick in your head for the rest of the day, but maybe that's a good thing. So there you have it. That's the feedback that I received from successful real estate investors. Now that all the big secrets are out there, I've shared everything with you. I've spread the good word. When you make the decision to want success, then go out and find a mentor and have the self-discipline to learn from his or her success. And ultimately, you have to make a choice. I'm right in that boat right now. I am absolutely in that boat right now because let me relate to you what I've been up to. So as some of you that listen to the show frequently know, I sold off some properties that I had owned for a very long period of time. Owned them a lot longer than I should have. And part of the reason I wound up owning them longer than I should have is because I was following somebody else's investing strategy, somebody else's map, so to speak. And I made a lot of mistakes when I purchased those properties because I was more interested in just trying to get a deal done than I was in actually fully understanding what I was getting into. Now, this is going back like 20 years ago. And because I made mistakes back then, it took me time for those mistakes to remedy themselves. Well, they finally remedied themselves. I finally was able to sell those properties, and I am doing a 1031 exchange out of those properties into replacement property. Now, because I've done the things that I told you to do on today's show, I have studied the markets that I'm interested in. I know how to evaluate property. I am properly educated. I've got a mentor. I've got people on my team assisting me with helping me to find replacement properties. And ironically, one showed up 2 days ago. And I have been working with my real estate agent to get all of the necessary information that I need in order to make a final determination as to whether or not I choose to go forward with this property. Now, ironically, at the halfway part of the show, as we went to the break at the end of the second segment, my phone rang. And it was my agent. And she gave me an update on the property situation. She said, there is somebody that has made an offer on the property. And I said, okay, so I know I've got competition out there. And because I've got a great real estate agent, she was able to get information for me that was necessary for me to make an informed decision. So when I am finished with today's radio show, I'm going to do exactly the things that I told you to do. I'm going to finish my evaluation on the property. I've already got my lender all lined up. I already know I'm pre-approved for certain dollar amounts. This particular property, the price range that it's in, it meets my criteria, yada, yada, yada. And this afternoon, I will have a conversation with my mentor. I will bounce my approach to my offer off of my mentor so that I get that disinterested third party feedback on what I'm about to do. And when I get that feedback, I will craft an offer with the assistance of my real estate agent, who will in turn present that offer to the seller. That's pretty much how it's all going to roll. Now, some of you might be thinking it's going to take a ton of time to do all this stuff. It's probably going to take me maybe about 15 minutes with my mentor. Might take me about another 20 minutes to finish my calculations because I've already done a lot of the homework. And when I'm done with the mentor, if everything seems to be making sense, I'll call the agent back. I'll say, this is the price we're going to offer. Here's the terms. She'll write it up. She'll send it over to me. I'll do a digital signature. I will make sure that money is put into the proper escrow account, and we'll move forward. And that, my friends, is what it takes to be a successful real estate investor.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.